All right, stocks continue to have a little bit of a breather going into today's widely anticipated NVIDIA earnings. That was just about the only thing talked about today around on any kind of financial media that there was. Pretty much has been talked about and anticipated for the last couple of days. And so the markets kind of took a little bit of a breather during these past couple of days in anticipation of what's widely expected and what has been so far actually in the after hours a pretty decent response to the NVIDIA earnings. A strong move to the upside for NVIDIA after initial drop. And then, of course, because of that, because of how big the market cap is, a strong move for the rest of the broader markets. So we're going to look at the charts and look at the patterns developed over this past few days, this kind of short-term buy the dip pattern that's developed, and see whether or not this overnight rally that we're getting right now has any legs to be able to continue to build upon it going into the rest of the day tomorrow, and for that matter, the rest of this week, and the rest of the seasonally bearish time of year for equities and bullish time of year for volatility. We'll take a look at what's driving. There's a kind of some interesting patterns developing, especially in the bond market, that's impacting the rate cut odds are moving pretty dramatically. They're actually having a pretty interesting impact on equities and risk appetite just in general. So we'll take a look at that. And then our trade idea is a stock that, unlike, has been converging for a while, unlike NVIDIA, has actually been a lot more bearish going into its earnings. And we'll see what kind of trade it's set up for going through its earnings announcement and beyond. So we'll talk about trading that. So let's go ahead and get started. Today is Wednesday, February the 21st, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, before we get going too far, I invite you to subscribe to our YouTube channel with this icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out some of these things on the right, including our Market Outlook live video, where I take a look at all our old Market Outlook trades to see whether we should close them or not, stay in them. We also put on today's Market Outlook trade already before the market closed in that class. Drop down to the bottom, click this heart. It opens up this tab. Hit that like button there. Same thing here. Click this thumbs up icon. It opens up that tab. Hit that like button there. Again, the more you do that, it helps us get our content out to all of our followers on those platforms. So we always ask for it. Our goal is to get to 100. So those who do like these day in and day out, thank you very much for doing that. Those who don't, you can do it right now while you're watching with one or two really easy clicks. All right, let's take a look at the S&P 500 with the market forecast indicator here. Again, remember, this is before the NVIDIA earnings, which came out after the bell and really sent futures shooting higher. The question, of course, will be how much it keeps going up past these highs that we had. We'll see here earlier. But we taught, in fact, in our technical analysis class, we kind of talked about the drop in the S&P and NVIDIA in particular probably set us up for a better move in the stock after its earnings release, because we had declined over the past few days. It set us up so we weren't so bullish going into it, but we were pretty bullish going into the close today. Nice little intraday rally. It almost got the intermediate line back above the market sentiment line. The near-term line did dip into bearish territory there, but we'll see how much longer that lasts. The momentum line is still also in bearish territory, but rising. And of course, you would expect, barring a gap fill tomorrow morning, you would expect it will continue to rise tomorrow. But nice, good buy the dip situation you got going on there on the S&P 500. If you take a look at the Dow Jones Industrial Average, it looks very similar. Again, the intermediate line is below market sentiment. Is back up above the 80th percentile, though, so you're back to dark green shading. Interestingly enough, when you look at the Dow Jones Transports, not necessarily the case. That you have dark pink shading and a red line. The intermediate line is well below market sentiment. It's actually in the lower half of the chart. That's why you have the dark pink shading. The red line up there comes from the moving average falling. Short-term sentiment is bearish, but at least it's slightly improved. So kind of an interesting dynamic change from what you're seeing with the industrials. You did get light pink shading on the NASDAQ. That's going to change in a big way tomorrow, assuming this open holds. We build on that. You would assume that we'll build on that. The intermediate line did drop slightly below the 80th percentile, hence the light pink shading. Not quite a bull tag though, because we didn't close below the moving average, which would have made it yellow. And that's where you get the bull tags, is the light pink shading and the yellow line. The near-term line is in bearish territory, so you are set up for a bounce to come off of that. And then finally, your Russell 2000, which also had its intermediate line turn back up today with today's, well, actually would be a small loss there, but its intermediate line still turned higher. Got back above its market sentiment line, though it's still below the 80th percentile. You're back to dark green shading because it did turn higher. Your near-term line did drop slightly into the oversold levels. Again, also probably set up for a buy the dip there, coming off of the moving average without really breaking below that moving average significantly. It's going to again depend upon how the markets respond and hold on to those gains that we just that we're going to barely see, that we're going to see in the after hours into the pre-market tomorrow morning. Let's take a look at the weekly chart for the S&P, and you can see again still a weak candle here. Still have the PPO like starting to slowly roll over and in near the 85th percentile of the past 5 years, right? 3 years. Past 5 years would be in still the 85th percentile of the past 5 years. You're not quite down to negative candles yet, so you haven't crossed below zero here. But again, you're pretty close, right? You got to transition. Now it's a matter of whether it's like the last time we hit zero when we bounced. And like we did that over here too, when we hit zero and then we bounce. Are we going to do that again, right? Hit a transition and bounce back up again. It's not very common to do it once, especially not common to do it twice in the same trending move. If you take a look at the 3 green arrows, you have 1 red arrow on the MACD. On the S&P, you still have 2 red arrows on the Qs down there at the bottom. You still have also 1 red arrow the diamonds, with the stochastics turning up on both the S&P and the diamonds, still above the moving average. And then your IWM actually got you back to 3 green arrows. So you're back to kind of 3 green shading there. Remember, in the past 3 months, the Russell is the only one that actually has gotten 3 red arrows and a red line, right? So we were bearish enough to actually get a small little decline, intermediate decline there. If you take a look at some of the other, we need to take a look at the 2-line version of this chart. You can see, again, we're almost back up above the 8-day moving average for the S&P. We are in the after hours. Again, we're at 500 in the after hours there. The Qs, same thing. We dipped for the 2 days below the 17, but today, again, in the after hours, we're up to 431, so that would be right there. So be back above the 8 and the 17 tomorrow. Of course, the MACD is dropping below its moving average, so we'll see how that resolves. And then finally, IWM, you can see also flirting with the 17-day, with the MACD flirting with crossing below its moving average. We are at 199, so that not as big of a move. Basically, we're filling in today's gap on SPY. We're filling in this gap up to 500 on the Qs. We've had a little bit more of a gap to falter, so we're at 431. So we have filled in this gap from yesterday on the Qs as well. And then IWM, again, in the pre-market, IWM is up to 199, so it's not quite all the way. In fact, it's just kind of barely, it's not quite into that gap yet, this Tuesday gap. So we'll see if it ends up filling that in by the time the rest of the day is over with tomorrow. Taking a look at the DMI, you can see the DMI still has a really strong positive indicator. The negative is still above 25. We'll see how much longer that ends up holding up. IWM is different. Again, they're both above 25. The positive still, again, it's very uncommon for the positive indicator to still be above 25 when your negative is also above 25, much less also being above the negative line. So it's very rare to get this kind of pattern. It goes to show the strength of this bullish trend that we've been on. It's very uncommonly strong. You're below 0 on the CCI. You're below 60 on the RSI. That shouldn't, we should be able to bounce back up there. And then looking at the Ichimoku cloud, Again, we're flirting with being above that green line. Still got a very strong trend going. We haven't ended any trend yet. Got a strong, mature trend on the Qs, even though you are below the green line. That won't last very long. And then the IWM still doesn't have a trend at all going. So you're still, at least you're above the cloud, and at least you have a positive rate of change. So there's a couple positive things working in the favor for small cap stocks. I showed you today's range. Again, we still don't have a new high. We won't have a new high tomorrow either, unless we really build on that move up to get past 503.5. Again, we're now below 70 on the green. We've already hit 0 already on the red line. So we are susceptible to a trend change. So it's definitely something to keep an eye on, especially as we fill in the gap. Making this just kind of a one touch, even though it's not very bullish, because we weren't even above the 50th, much less the 70 line on the red line. But still, getting a one touch, you can see, would be kind of like a bounce, like a little bit of a bounce up, and that's what we'd be getting again if we were to bounce up there. Today's volume going into this after hours was obviously pretty light, below average on the volume. That's not surprising. You had a big news event coming out. It probably will end up being above average, at least slightly above average tomorrow, once we actually get past that earnings announcement. If you take a look at the volatility index, you notice we did drop back below the 95% mark after spending a good chunk of the day above 95% relative to the VIX 3M, and again, you're still well above 80 on the VVIX. So still showing relatively strong levels of volatility. We'll see how much that gets impacted tomorrow. You might actually get an increase on the VIX with the jump in stocks. You are still above the 200-day moving average despite this small decline. Still above that moving average there. And you notice the 8 and 17-day averages of the VIX are also still rising above the 30. So we're still in kind of this bullish volatility mode, even if it's been, as of right now, a slow grind higher as the 200-day average value of the VIX has worked its way down towards 15. Not quite below it yet, but at least worked its way back down to really, really low levels. All right, now let's take a look at what's driving this price action here. So let me come over here to just looking at today alone. So bear with me 1 second while I change this time frame. You can see commodities were up today. Yields were up. The dollar wasn't up. It was flat. It was higher than equities for a good chunk of the day. You can see going into the close, you can see somebody knew something was up because you did have, you were down, almost over 1% on the Qs and IWM into that last, 40 minutes of trading. S&P went from being down over 0.5% to being positive by the end of the day. Emerging markets were also positive by the end of the day, and so were developed markets, which also made a strong little push in the close. So strong rally into the close there. Nothing really changed here on bonds. Bonds stayed relatively lower. Commodities also rallied too. So nothing really changed there except for a big jump in equities, and they still ended up being down, ended up outperforming bonds at the very least, but still ended up being lower on the day. Very poor bond auction pushed yields higher. You can see the 10-year yield ended up finishing at 4.32%. You can see TLT continues to trade in the lower section of its value area below the point of control, below all those moving averages. The 50-day has not crossed back below the 200-day yet, but you can see it's relatively close. Most likely going to trade in that range with that low point that we set last October. Which would mean TNX is probably going to work its way towards that 4.5% level. It's something we've been watching for. So it's actually a bullish sign for the markets to have yields move back towards move higher again. Again, the lack of rate cuts was very bullish for the stock market in 2023. You would expect that to be the same for 2024. The lack of rate cuts being very bullish. If you take a look here at the rate cut odds have really dropped significantly to the tune, like just back just a little bit more than a month ago, we had a pretty much 100% odds that we'd have a rate cut by June. We actually had 100% odds we'd have 2 rate cuts by June, and we had a 90% odds that we'd have a third one by June. So really high odds, if you look at the historical chart, really high odds that we'd have, again, just right over here, you were at an 89% chance of having that third rate cut, all the way down to 4.75% to 5% by June. So basically starting in March and going 25, 25, 25. Well, now, instead of having, again, 89% chance that we'd be down to here, we only have about a 70. We have a 30% chance that we might not get a rate cut at all. So big difference. Big difference for the rate cut odds. Things have changed dramatically in the past month or so, as you see that the odds of rate cuts are dropping. And you notice since that time frame, since January the 12th, when things really changed, again, that coincides with right over here with yields kind of finding a bottom right there. We did retest the bottoms, but really from 3.95%, we rallied now up to 4.32%. But in fact, if you notice if you go back to the asset class comparison here, and you look at the from January the 12th on, so let's go to the 13th on. This is how the stock market's performed, up 4%. Bonds are down 4.5%, which means yields are up. Commodities are 5%. The dollar is up 2%. This would have been a combination that would have been bearish for equities in 2022. But again, since then, since in 2023, now 2024, the lack of rate cut odds has really been bullish. And you can see it has been bullish in the last month plus too, as stocks really are looking at that favorably. And this is despite the fact that things are changing for, we're rotating away from the big 3 sectors: technology, discretionary, communication services. Technology giving you the bull tag today. XLY has been relatively flat for the past few months. XLC has been starting to show some signs of weakness, some very soft signs of weakness here. If you look at the rotation graph, and let's go to the sectors. Again, you can see on the daily chart that again, industrials is your biggest sector. That's the only sector that's in the leading quadrant. Technology now is actually in the lagging quadrant. Technology and staples, communication services is weakening towards that lagging quadrant. And of course, discretionary, you can see if I were to zoom in on that, so you can see that one. It's not in either one of those two. It is in the improving quadrant, but it's losing momentum. As you can see, there are other sectors that are obviously gaining momentum, in particular financials, energy, materials, utilities, and real estate, all really gaining momentum fast as we are moving up here. Again, that's kind of a sign of rotation that we're moving towards safety, right? Safety areas. You can see them move higher. Again, we don't really see that during a normal cycle, right? You can see, they have utilities and real estate outperforming we haven't seen that here. We started to see a little bit of signs of real estate moving, and utilities did come close, but then dropped back down towards low levels with staples, and has been in this bearish mode as other sectors have really performed. Staples moved up a little bit there, along with communication services and healthcare. Utilities, staples moving all the way back down as XLK, XLY, and XLC really took off again on this new leg higher, and now we're rotating back out of favor, and these other sectors are rotating into favor. And so we're definitely in a sector rotation, which makes you wonder a little bit how much, if there are going to be any legs to this move, this after hours move, or they're going to be really able to build on that when the rotation has already been coming out of those areas. Not completely, but you can see they're in the weakening and the lagging quadrant, and you would expect that will continue to be the case as these interest rate sensitive areas and dollar sensitive areas all move their way towards the leading area, which would be what you'd expect in more of a softening market, right? You saw that over here when we went south over here. You can see energy, utilities, real estate were some of your bigger winners during this decline. Healthcare as well. Technology made a run, but then faltered. Energy and other safety, utilities, staples, healthcare making another run there. Utilities and communication services tried again a third time. They faltered, and energy and staples and utilities made a run again to the downside. So, that's kind of that's the sector, that's the move that you'd expect that we'll see here over the, let me just update this so you can see a little bit better. That's the move that you expect that we'll see here as we rotate towards these areas. And again, it's not nearly as strongly bullish. Fortunately, we're not great on breadth, but at least we improved a little bit today on the breadth there. The number of stocks above the 50-day moving average increased slightly. The number of new highs and new lows did dip down below a second straight day below its average, but at least still maintains a positive number. The McClellan oscillator also dipped slightly. I think it actually ended up, dipped slightly here by the end of the day today. Again, not too significant. And the money flow actually ended up bouncing. So when you look at the volume and you normalize that with the price, it actually turned up, and we actually got back above 60 on the oscillator down here at the bottom. So not all negative signs, and it is very, very soft weakness, but maybe soft enough, maybe enough weakness and soft enough that we can use it like we have these last few instances as a very short-term buy the dip kind of near-term rally opportunity. All right, that brings us to our trade idea of the day. It's on Network Appliance NetApp. If you take a look at it's got light dark pink shading, had a red line earlier today on this market forecast, a little bit of a rally here into the close, changed it. Oh, it looks like it's still actually red there. So that's what I was going to say. It was a dark pink shading and a red line here. Though we did, like I said, had a nice little rally pretty much right after we did the Market Outlook Live video and put the trade on. Short-term sentiment is still bearish, and it is up in the after hours. We'll see if that continues to be the case. Again, if that move can end up holding or not. If you take a look at the weekly chart for NetApp, and you can see we got a strong bearish candle below a falling 10-week moving average. You got the red arrow there, the strong, pretty decent size candle as well, bigger bearish candle than what we've seen as of right now. There's a couple more days left, obviously, in the week. Looking at the 3 green arrow chart, obviously we have 3 red arrows right now. MACD and stochastics are both strongly bearish levels. As you can see, the earnings coming on after hours, and the reason why we've had a little bit of a push up there to the upside. And if you take a look at the DMI, you notice that we're above 30, we're below 20 on the DMI, so strong move there. Looking at the RSI and the CCI, you can see we're below 40, well below minus 150 on the daily. If you look at the weekly version of this, we are well below 0 and almost back below minus 100 now on the weekly CCI. So things are changing. Sentiment is changing pretty clearly on the stock. No trend at all. You are in the cloud. You do have a negative rate of change. You don't have any trend developed yet, as both lines are still at weak levels down there at the bottom. And then you can see we are breaking below the lower band. We were actually again, like I said, at the all the way up to the close. We were at the lower band until the very, very end of the day. And we were also below that lower Keltner channel. We're still in the lowest, we're pushing against for 3 straight days now, that lower band, and you're that close to getting, green dots, which essentially means that that the bands are squeezing, are breaking out of the Keltner channels. Obviously would potentially could start a bearish move there. So what we decided to do here on this trade was to do a bearish put towards that, a long put vertical towards that low 20s delta. You can see it gives us, let me get rid of this trade here. Gives us a little bit more than a 2-to-1 reward to risk ratio by the time we got filled into it. Again, like I said, we are down a little bit since we got in because it's at the what is that now in the after hours at 85 level. So it's, you know, it's just a little, oh, here, we can take a look at it on this chart. Here, let's go to and show the extended hours trading. So really not a whole lot of, actually doesn't have very much trading at all. Just that little rally going into the close is all we had. So nothing too major there. And we'll see if how that ends up playing out here once the market opens here tomorrow morning. But we did have a little bit of a gain so far in the trade because of the pricing that we got on it. We, like I said, a little bit better than the 2-to-1 reward to risk ratio. And that's how much wiggle room we have to work with if it does kind of bounce up here. But you can see very little, you know, it's broken below these moving averages. You're into a volume gap. There's very little volume. You're into this gap that, you know, from the last earnings where we really jumped up pretty sharply. So there's not a very, very poor margin of safety. And again, all we have to do is get down to 79. And 79 is right inside of the value area. So basically we have to make a run towards that 200-day moving average, which is actually what you would expect it to do if you're breaking below these averages here like we've done in the past few days. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at marketscholars.com for free. Follow and like me on Twitter and Facebook as well. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.